Review of the US stock market. The US stock market is leaning towards bearish dynamics. The NASDAQ index sank very strongly, and I would have looked at the technical sector even more. In this review, we will also look at a number of promising tech companies. NASDAQ index. This index reflects the current state of the tech sector. In a free downward flight, shares of Apple, Tesla, Microsoft and many other tech companies. Basically, investors cut their shares to make money in the real sector, but this is not particularly reflected in the business itself. AMD shares. A month ago, I spoke about the discrepancy between technical analysis and fundamental analysis for this company, and I turned out to be right. The stock is trading lower despite good past earnings. In these turbulent times, top companies fall in value, and all garbage flies higher than the birds, and this, of course, is an abnormal phenomenon for the markets. However, let me note that many successful investors used the tactic of buying up good companies, while others dumped them in a panic. The same should be done now. I expect the stock to fall to the support level and wait for a reversal signal to form. If it appears there and it is convincing, then you can buy this company in a drawdown. Qualcomm shares. Qualcomm shares are in the same free fall. Let me remind you that Apple refused to cooperate with this company. Heavy blow. In addition, the corporation reported a month ago that restrictions on the supply of microcircuits are holding back sales. The company has problems, but they are mostly solvable. In any case, according to the Fibonacci levels, they have a place to turn around, but here it is necessary to follow the fundamental background of the company and watch the formation of new signals of technical analysis. When the two methods are properly combined, good results can be obtained in determining the most appropriate entry point for a given stock. But you should also keep in mind the negative elements. If the problems drag on, then in this case it is worth looking for better alternatives. We will come back to Qualcomm shares a little later, but for now I would recommend keeping them in mind. Intel shares. AMD rival Intel is also in flight, but their sale started recently. On the chart, I marked the level to which you will need to pay attention when the price approaches it. What Intel may be interesting to buy into its investment portfolio is the fact that they recently agreed with Google on a partnership, and such alliances lead to good results. If a tech company has some good relationship with any foreign company, it is more likely to be doing well than not. Therefore, as soon as you see them near the marked level, get ready to buy if you are interested in this offer. Forex market review for March 5. The panic continues and stock indices are gradually dropping lower. The dollar strengthened again and knocked down all our stop losses on the euro-dollar pair. The situation is becoming even more tense than it was before. Learn more about the foreign exchange markets in this review. Currency pair EUR/USD. Our recommendations were destroyed to smithereens by the growth of US Treasuries by 10 and 30 years. If earlier I was optimistic about the markets, now the situation looks really frightening. I don't see any reversal signals here at all. The dollar is strengthening and people are entering the cash in droves before accepting incentives. It can be seen that market participants are very much afraid of negative trends in the markets. I will be extremely honest with you. If a number of major players knew in advance that the Fed would cope with the problem, then we would have already seen traces of long purchases, both on stock exchanges and on foreign exchange markets, but these traces are not on the chart. This suggests that no one knows exactly what will happen next, and therefore it is best not to do anything here and wait for the situation to clear up. USD/JPY currency pair. But according to Gina, I was completely right. The reversal did not happen and the currency pair went up very quickly. I'd said that it is not entirely true to hope for such a high trend movement on the RSI indicator, because it will show you overbought for a very long time, when the price will rise and fall. Work on lower time frames following the trend as long as such an opportunity exists and there are no signals for a reversal. I marked the new target for the price on the chart. The price will move in this direction and you need to find a good entry point here. USD/CHF currency pair. Synchronous situation for the franc. Franc is getting cheaper on all fronts. This currency correlates with the yen and all movements, and signals for one currency pair can be adapted to another. Here the recommendations are similar, but as for the cross rates against the franc against other currencies, the situation is the same here. Switzerland will pursue a policy of weakening the Swiss franc, because it is too strong and hard currency, which harms exports. Now the dollar is strengthening on all fronts, because the whole world recognizes it as the most reliable fiat currency during the crisis. What will happen next? We will look at the weekend, and also look at the measures that the Fed will take. Review of commodity markets. Inflationary expectations are growing, but precious metals, on the contrary, are decreasing. What's going on and what to prepare for in the commodity markets? Is it worth working with them at all, or is it better to go to stock markets? We will talk about all this in this review. Gold. Let's start with gold. I was not mistaken when I did not recommend entering the pin bar, that I did not touch the trend line. Now we just have to wait for the right moment for gold. I said that now there is a clear and unambiguous downward trend, but the fundamental still speaks in favor of investing in this precious metal through futures and ETFs. The only question is when to do it. If you are long term, then you need to enter at the lower border of the downtrend. If you do not have the task of waiting for 6 months or more, then you need a completely different strategy for trading along the current trend. Including, you can consider the intraday trade, but this is for people who are aware of all the risks. Silver. Stop losses for silver have been knocked out and the price drops again. Priority purchases at the levels noted below. The situation is almost in sync with gold, but technically silver looks better in the sense that its overall movement is in consolidation and not in a downtrend. The recommendations are the same as for gold. It all depends on the strategy you personally choose. If you are short term, then I would now look at short selling within the day along the current trend, but this is risky for newcomers who are new to the market. Oil Brent. I would be very careful with oil. Yesterday prices closed in positive territory and there is every chance to continue the upward trend, but the risks here are more significant than in other cases. I said that the signal comes out weak on the daily chart, and therefore if you are considering using it, then I advise you to allocate a smaller percentage of your capital to participate in this speculation. Until the situation is resolved with the US debt market, all markets, including commodities, will be very nervous about what is happening. With a positive outcome of the problem, we can see oil at $70 per barrel, to which I am most inclined, but in a negative case, everything can be more deplorable. Otherwise, everything is up to you. In these turbulent times, I would be less active in trading and just wait for the best moments.